I want to see a show of hands. Raise your hand if you think that's gambling. Ooh. Okay, so one person up here, Terry, thinks it's gambling, and I'd say 30% of you guys.
We were supposed to raise our hand too.
Oh yeah, you can raise your hands too, yeah. All right, great. This is off to a good start. So Tarek, put it just to everybody right now. Why is this not gambling?
Can we ask the same question about zero-day to expiry options?
No, because I could do the same thing on FanDuel or on another gambling app, and I have to be 21 and I have to do it in a state where the regulators say it's okay.
I think the way that it's sort of we can sort of sit down here and debate this all along. I think there's this is gonna sort of be debated in the courts, and I'll let the courts decide on the legal merits, and we feel very strongly about where we stand. I think the more important thing is to sort of take a step back and think about sort of why the consumers are adopting this at the scale and the pace that they're adopting it with. And as you said, there are other alternatives, for similar type of speculative activity, but they seemingly are engaging with Kalshi and some other prediction markets at this rate. And maybe just to sort of talk about the rate, prediction markets are the fastest growing company in America today, comparably to AI. And there's, which one is growing faster, I'm not exactly sure, but they're both growing at a similar pace. And the most important thing, at least for us, is like the basic mechanics and how the activity is basically happening. It's like, are you walking to a house where the house is setting the odds and where the business model of that house is essentially customer losses. Like the revenue of the house is equal to customer losses, and that's the key KPI that they track on any given quarter, which I sort of bucket squarely under the gambling casino, betting model. Or is it an open, free, fair, and transparent marketplace where market participants are engaging with each other, whether they're hedging, they're speculating, they're using the forecast to get informed about the future, or other utilities, all of which exist in our grain futures.
So even if they're doing the same thing on FanDuel or DraftKings, the way they're doing it is different, so it's not gambling.
I think speculating in any financial instruments, people have historically called it gambling. Like, grain futures in 1905 got legalized in the Supreme Court, and half of America thought that was gambling, because what is gambling? You're putting some money to make more money on something you don't control. That is the definition of gambling in something like 20 states. Everyone sitting on this panel has gambling products under that definition. To me, what's important is I believe that a lot of people have opinions about politics. They have opinions about the economy. They have opinions about sports. They have opinions about culture. I actually believe these people have more opinions about these topics than they do about, where is the sort of S&P going to land at the end of the day.
Right.
And from that perspective, I think, the mechanics of whether you're trading against somebody else or whether you're being extorted by a house is very, very critical to that definition.
Terry, he mentioned grain, so.
Yeah, I just want to say a few things. I raised my hand only because I think it's, when you look at what the Commodity Futures Trading Commission has done, they have defined these as swaps. And when you define them as swaps, how do you define them as gambling? Even though if the Bears are playing the Packers and it's an outcome based and the same payout is done on a prediction market or at an online registered affiliate of any state, how do you say it's not the same? But our federal government has seen it differently. So I want to be in defense of Tarek to some degree here, because it's not like he's listing illegal contracts. It's not like CME is listing illegal contracts with FanDuel. But I am hard-pressed, and I think it's up to the government to make this determination so we don't have to raise our hands so we all know what it is. Are these swaps? And because of the word, if you look at the definition of a swap, there's the word occurrence in there. And an occurrence means if you exchange a cash for a treasury, that would be deemed a swap on a treasury. There's also the word outcome in the language under the definition of a swap. So you can pull the word outcome up, and then you can say, well, an outcome is based on an event, and an event can be a sporting event, to Tarek's point. So I'm not disagreeing with that, but I think it's a very, very difficult situation we're in right now, and there needs to be some clarity. One of the things I told Tarek, I met with him earlier, is the best way for prediction markets, crypto, or anything to grow is to start to get some good, solid regulation around them that's sustainable through multiple administrations, not subject to administrations that are just going to take things up and take things down because of a lack of an understanding. I think that's the biggest problem we have, especially with crypto and especially with predictions. So I'd like to see new applications, new ways of doing business work, but let's do it where we all understand it, where we don't have to raise our hands.
Adena, you were also raised your hand when you said it was gambling, but at the same time, you're making your first foray at Nasdaq into prediction markets with outcome-related options. It's pretty limited in scope. What would it expand to, or does the regulatory environment, how you view it, not allow you to expand it much beyond those indices?
Yeah. Well, I think the first thing is I agree very much with Terry that we need very clear rules of the road. You know, the markets thrive when we have consistent regulation, and it allows investors first of all, to be protected and to try to drive fairness into the market infrastructure. I think the second thing is that it allows us all to figure out how we can, construct products that can be made available to investors in different forms to allow for them to express themselves in their views about market outcomes. With the event options that we've requested approval from the SEC to launch, first, we are going to the SEC because the options markets are governed by the SEC. And we want to make sure that within the confines of the rule base that we operate within, we can create a construct that will work for investors. And the idea of an event option, we're asking to launch the event options on the Nasdaq 100. So it's not on an individual stock. It's on a basket of stocks. It's a product that we control. And we are making it so that it's in a way kind of an entry point for investors to come in and try to engage in options with a very simple contract. Up, down, in terms of how they think about what's going to happen in the Nasdaq 100 the following day at certain price points. And so it's a very simple way for them to engage in the markets, but with all of the protections that our options markets provide to investors. And, Tarek also brought up zero DTE, which are short-dated options. And I think that's a different construct. Those are options that allow for investors to hedge risk. They are at scale. They're centrally cleared. There's a way for them to have open interest and allow for investors both to express themselves in terms of how they see the outcome of a stock or an index over the coming days. But it also allows institutional investors to hedge risk in an environment where there's a lot of fast-moving markets, a lot of change that's happening in the markets around them, and they can therefore manage risk in a shorter dated construct in a regulated environment that is governed by the SEC.
Yeah, Thomas, come on in. I saw you nodding along there.
Yeah, but I think in all fairness, Tarek has a point. Event-driven contracts are not really new, right? They have been discussed for many decades. For instance, we at Eurex, we have dividend futures which have the same features. You are trading company earnings based on outcomes. So I think what you see is it is really a spectrum that you have there, which ranges from you make macroeconomic events tradable with probably also real genuine hedging needs, but then of course the spectrum ranges into sports and into other underlyings which are more in the category of entertainment. So I think there is still the jury out, and the US has now taken, I think, a very proactive stance, at least the chairman that we heard yesterday, on these markets in contrast to Europe, right? Europe is much more conservative. There is a question on consumer protection. So where does it start? Where does addiction start? Where do you need to really protect consumers, where some of the jurisdictions are much more conservative? And there is, of course, a question around market manipulation, around market integrity, which I think is really crucial for also these markets to grow. But I think there is no question that there is a price discovery function like this wisdom of the crowd, which has a certain value. It might be that the data side is even more valuable than in the end the trading turnover of those contracts.
Boon, in Singapore, regulators have not given approval to prediction markets, and they're taking a different approach. But I'm just curious how you're watching this play out in the United States right now from Singapore. What does it tell you?
Well, while there may be a legal and regulatory determination here, in many parts of Asia, I think the legal view is clear on where this stands. But I think what is important is whether there's probability events or prediction is a very interesting signal and engagement format. And it's what Thomas said. I think it fits in the spectrum of risk management. The question then is, how do we set the bar high that allows institutional investors to participate in this? Because even in our business, like in the Baltic Exchange, The sea level and the weather will determine whether the ship will sail, and that will determine what index level does it come out. Is that an event? Clearly it is. Is it meaningful in the overall tools for risk management to allow people to stay invested, but yet managing a portfolio? So it's a spectrum.
Tarek, I'm going to come back to you in a second. I want you to respond to something that I'm going to ask Terry, because Terry, you told my colleagues, Joe Weisenthal and Tracy Alloway on Odd Lots a few months ago, that you don't believe right now event markets on politics are a good thing. You also acknowledge that you've changed your mind on things in the past, mail-in voting, Bitcoin, and the like. Have you changed your mind on this, or do you still think they're not a good thing?
Just for clarification, I said I didn't believe event contracts on politics of all different elections was appropriate.
Meaning the scale of like a presidential election would be appropriate.
If you have an electorate of 100 million people on a $350 million people in the United States, then I don't really have a problem with two of them running and we make a decision on that. So but I do believe that the people of the United States make that by voting, not so much on a prediction. What I don't like is some of these other predictions. Politics is okay.
Okay.
But when you take it down to a lower election where you have, say, a small community of people that's got a 500-person electorate, and all of a sudden there's millions of dollars being bet on one guy versus another, I'd kind of say that it's under core principle 3 that would be deemed readily manipulable and against the law. So those are my concerns with certain political event contracts.
Tarek, do you share that view that if they get smaller, it's more manipulable?
I'll ask that give me a little bit of time, given that, this is purely about my business model.
Of course.
So let me just address a few things. So Kalshi today owns, I forgot, either, 94, 96% of the regulated prediction market business today. So we have seen why these customers are using these products. We have seen what kind of customers are coming to these products. And we have seen why these products are important. So 2 weeks ago, the Fed put out a paper called Kalshi and the Rise of Macro Markets, which we're not talking about here. But I encourage you all to go and read it. And, it was a very simple, you read it, Thomas, it seems like, which is why you had the opinion you had, I guess. But the TLDR of the paper is that this is the most accurate gauge we have as the highest economic authority on the planet to what's going to happen with the economy on GDP, unemployment, Fed interest rates, inflation. And this is the Fed paper on the economy, but there's abundance of papers on politics, macro, climate, and a variety of other questions on the importance of prediction markets as this sort of source of signal that is differentiated and actually more accurate than any alternative we have. And to me, that's one of the most important things, at least in 2018 when I decided to start a company, that I believe I could work on. The debate between speculation and hedging and price spacing is an age-old debate in the futures industry. It's always been existent. And there's always been the case, well, some people are speculating and it looks like gambling. It feels like gambling. It squawks like, everybody's kind of talking about ducks these days. But the law is not ducks. Economy is not ducks, right? There is sort of some ground truth, which is you need speculation. You need liquidity for these markets to achieve their purpose. Without liquidity, without speculation, my markets wouldn't work. And I will make the claims that none of your markets would work. Zero DTE, zero day to expiry options will not work without liquidity. And so to me, yes, there's a question of difference in the underlying. The underlying is different. Some of it is sports, and maybe you don't like it, and you don't have to participate in that. But some of it is economics, some of it is politics, some of it is weather. But that difference in underlying doesn't make the activity more gambling, right? It doesn't. When you're participating in a stock option and your counterparty is Citadel and is paying your broker PFOF because they know you're doing something dumb, that to me is more gambling. And that to my customers, when you ask them, why are you trading on the weather and politics and not S&P? Unequivocally, the surveys give us 95% response rate. Well, I don't trade in traditional financial markets because I don't have an edge. It's rigged against me. I cannot gain information about these markets, whereas some of these people believe, and they do, gain information about inflation, about politics, about sports, and so on and so forth. And the numbers show it. The super forecasters that are on Kalshi seemingly are outperforming Wall Street at predicting all these events, which is amazing. That's the whole premise of these markets. On politics, look, Kalshi spent 4 years getting regulated up front. I think there's been a lot of commingling in this industry that is important. I will uncommingle it for all of you. There is Kalshi, which is regulated, US-based, committed to the rule of law, under Biden, under Trump, under any administration. We will always be committed to this, and we'll be working with regulators for rulemaking. But there are others in this space that are based offshore in Panama that are doing, I honestly don't know what they're doing, but anything and everything under the sun. So there are things that some would argue that are more, I actually agree with Terry. Some things are more readily susceptible to manipulation than others. I don't agree that local elections are more readily susceptible to manipulation than global elections, and there's a lot of ways to police that. But the way that we approach this is we are focused on building a fair and transparent marketplace. And the beauty, the blessing and the curse of prediction markets is that when there is a suspicious activity, you all see it. Tim, you report on it. It's right there in the chart, out there in the open. All the trading activity is public. It's also reported to the CFTC, and you see the weird patterns that our community can flag for us, that can go into investigation like we did. We released 2 investigations recently around, somebody who worked for Mr. Beast and a governor candidate around committing fraud. A lot of you release investigations pretty commonly. But, we are committed to building a marketplace that is safe, responsible, and where we police bad actors. I'll stop there.
You've been listening to Kalshi CEO Tarek Mansour. He's speaking on a panel with Bloomberg Businessweek's Tim Stenovec, along with the Deutsche Boerse Group Executive Member Thomas Book, CME's Chairman and CEO Terry Duffy, and Adena Friedman, the Nasdaq Chair and CEO, along with the SGX Group CEO Boon Chye from Singapore. Let's go back to Boca Raton, Florida.
Addicted by betting on certain sports events or other things. Right? I see non-farm payrolls or so. These are hedging events that really have a meaning. But then there's also a part where people would argue there has to be consumer protection because people get broke if they continue to gamble and bet with these.
Let me give some also high-level principle. Like, I hope that Europe follows America in terms of innovation and regulation and not the other way around. I really hope that that's where we land in 10 years, because I think we'll be in trouble if you follow Europe. I think we'd be much better off if the other way around happens. When it comes to customer protection, there is a very robust customer protection regime in traditional financial markets under federal government.
Yeah, the question is, what are financial products?
Well, I believe that anything that's openly traded in a fair and transparent marketplace is a swap. It seems like, Terry, at least you kind of see similarities in that definition, or at least similar views in that definition. I think that swap could be on a politic event, it could be on a sporting event, it could be on an economic event, or it can be on, whether the S&P 500 will land 2 points up in 5 minutes, right? Now, if you're walking into a casino and they are giving you a fixed line, that is a gambling product. What is the difference between state-regulated insurance and on-exchange hedging? One of it is open, competitive marketplace that needs global, nationwide liquidity, and the other one is you're walking into a house that's giving you fixed odds for that insurance, and it's a bilateral trade.
What about variable odds betting, like parlay bets, things like that?
What about multi-legged options? Should we stop those?
I'm only asking whether or not you consider.
I mean, the only difference between combos and buying it is, like, if you buy contract X and contract Y standalone versus you buy them combined, you may get a little bit of pricing improvement. Isn't that the point of options theory? Like, that's the whole point of multi-legged options. So we can all sit here and sit down and be like, as long as retail is participating in 0 day to expiry S&P options, where they have no clue what the hell is going on about, and Citadel is paying us hundreds of millions of dollars to get that retail flow, that's okay. But if they are trading on something they actually care about or know about, that's the hard line we're taking, guys. That doesn't make any sense.
We could do this whole panel on prediction markets, and and I know there's a lot of interest. In about 20 minutes, I'm going to go to you guys for questions. We're going to have to move on. I do have one more prediction markets question for Adena about the data that you will be getting from contracts or could get from contract probabilities. Could you just explain to the audience and explain to investors how that data could fit into existing products? In other words, will this data become inputs for any other products that you have, and are you seeing demand for that from clients?
Yeah. I mean, first of all, I think Tarek is, it's a little unfair in terms of the construct of this panel. But I also would say that there is utility to elements of the prediction markets in terms of being inputs into financial decisions. And I think that we have to recognize that, as you said, the power of the crowd is actually relevant as we're thinking about how we're making decisions in other financial instruments. So as we've been thinking about how to make sure that we have data that's available to people to drive inputs, we've talked about, actually did a speech a long time ago about markets everywhere. So how do we think about the opportunity for there to be two-sided marketplaces? That's why I was asking Tarek about, variable odds betting versus fixed betting. I don't think that that's the distinction, but the ability to have essentially two-sided marketplaces to make to drive price discovery, to make it so that we can understand the true supply and demand in that moment of any sort of instrument. I think the key is, from a regulatory perspective, to define financial instrument. And so to understand what's subject to federal law versus something else. And, but in any event, the data that underpins what is ultimately driving trades across the prediction markets, particularly when it comes to economic signals, when it comes to drivers of underlying equity performance, those things are relevant for people to understand as they're making financial decisions and potentially investing across the securities that they might invest in. So we do see that as a relevant part of the data stream that we should be able to provide, and we would partner with firms like Kalshi and others to make it so that's available.
You said partner with firms like Kalshi. I just made a big bet on Polymarket. Tarek's sitting right here. Would you make an investment in Kalshi?
So I'm certainly not going to answer that question. But
Jeff is right there, by the way.
You were saying everybody's beating up on him, so now's a chance to.
Well, I only want to say I think that there's obviously, we all are here to try to innovate in a space that allows for and drives investor outcomes that drive the economy forward. That's really kind of our job. And also to make sure, though, as we are doing that, we're thinking very hard about how we're managing the fairness of the markets, the oversight of the markets, the surveillance of the markets, all of those things to create a fair experience for investors. And we're going to continue to innovate in our space, and we operate in regulated markets. We believe that regulation matters in these spaces, and so that's, all of our decisions are driven that way.
Terry, I'm going to give you the last word on this, and then we're going to go to macro.
Yeah, I just want to just say one thing, because I think we talk about peer-to-peer markets, and Thomas made a reference to it, and I know Tarek has as well. We have peer-to-peer markets, and it's called technology. Technology has never been better in the history of the world to allow every single participant the ability to have the same information as the biggest players in the world. They may not deploy it the same, but they have access to it today. That is peer-to-peer. That's much better than any prediction market ever could be, is the proliferation of technology to allow people to be in charge of whatever venue of choice they want to go forward. So to say that we only have peer-to-peer, which makes predictions better than traditional markets, is really malfeasance, because we have that today with technology and the ability of that technology to be accessible at a cost way for people to access it every single day. So I think that's really an important factor.
I think we'll come back to prediction markets in the Q&A, and there will be some stuff sprinkled in later. I do want to get to geopolitics and macro, because no question sitting here is a war, several wars rage across the world right now, most recently in Iran. Boon, Chye, I'm wondering about a more fragmented world, and a world where increasingly countries are looking inward, where trade routes are changing, where tariff barriers are rising. Does that more fragmented world benefit a hub like Singapore?
Well, first, I would say our thoughts are with those that are affected. And it's, what's happening in the Middle East is clearly complex and evolving. But in a more fragmented world, even if I look through the lens of Asia, that has started a while back. Trade flows were being reimagined, supply chain were changing. And if you look through the lens in Asia, you have the core engines of China and India, a Southeast Asia that is growing, and then a price signal that could come out from Japan through rates and FX. So I think in the fragmented world, hubs are still important, but I think nodes that are being connected together will be even more powerful. So I think more importantly, at least for us, for market infrastructure, even with events market driven AI, I think the premium being put on trusted market infrastructure for investors become even ever more important.
What have just for you, the last few days looked like in terms of flows, in terms of volatility, in terms of what you're seeing, especially with regard to what we've seen with energy around the world?
Well, obviously, volumes have grown tremendously, but I think what's important is markets are still orderly, margin calls are being fulfilled, and trades are being settled. We see the spike, 5 sigma moves across many different markets, but I think what's important is also it's no longer a most likely view, most likely scenario. Dynamic and nimble portfolio risk management become ever even more important. So I know we'll come back to prediction markets again, but I think there is some value on probabilistic events that if we raise the bar high enough, and obviously we're not going to venture into a non-financial metric, but I think that could be in some way beneficial for investors to read signals.
It always goes back to prediction markets, no matter how hard I try. Thomas, this more fragmented world that we're seeing, does it increase the need for consolidation of exchanges in Germany? Does it increase the need for consolidation of exchanges in Europe? And Adena, you run exchanges in Europe, but Thomas, I mean, there's been a lot of talk in Germany about consolidation. Would you be open to it?
I mean, I think, first of all, it creates the urgent need for Europe to work on its strategic autonomy. I think over the past weeks and months, this is an ongoing theme, and sort of the irony is that a lot of the pressure that is now on Europe to create sort of autonomy in energy, in technology, in defense, but also in capital markets is actually a positive thing for Europe to get its act together. Capital markets is a crucial thing of that, and the savings and investment union, but really the focus that has to be there is on activating private capital in these markets, right? So the market infrastructures, Adena operates a large exchange in Europe. We are operating a large exchange there. The market infrastructure is there. The question is really how can we activate capital? We see really positive signals in Europe. We see more international investors returning to the markets, also more IPOs, and in particular we see more retail activity that's coming, but still there is, whatever the studies say, 30 or 35 trillion of savings on bank accounts that are sort of to be activated for investment in capital markets.
Yeah, Adena, how are you looking at the macro environment? Because interestingly enough, you're sitting between, you work with SGX.
We do.
Have a partnership with them that you announced in the fall. And then also you have the Nasdaq Nordics, so you're big in the Nordics as well. What's your view?
Yeah. So I think that when it comes to the European Union, first of all, it's an enormous economy that is really kind of untapped, I would say, in terms of the potential to grow, to engage the citizens in the markets and capital formation, everything you just said. And there have been a lot of studies as to what is the path for that, to unlock that potential. When you really peel back the onion on that, I think you need to start with public-private partnerships and the government policies around equity ownership, around, there can be tax reform, there can be the pension plans and how they deploy their capital across the markets. We have something in Sweden which are called the ISK accounts that are extremely tax-efficient accounts for investors to be able to invest their money into the markets, any of the public markets, but they have a very, very preferential tax rate of 1% on their holdings and no cap gains tax. If you look at the launch of that program back in 2012 in Sweden to today, the amount of equity ownership in Sweden has gone up to now 56%, which is almost equivalent to the United States, whereas the average across Europe is like 19%.
Germany is 17. So.
Right, and so there is a huge opportunity to really tap into the ability for everyday citizens across Europe to engage in the capital markets to drive wealth creation. That's also allowed us to have more than 500 net new issuers come onto the Nordic markets over that same period of time. So you have this incredible opportunity to really drive capital formation, have innovators come, small to medium enterprises, larger companies, and really fuel that innovation ecosystem across Europe. That is not up to us to do. That's up to the governments to do with the private sector. And then for us then to create really robust markets. The one area within those studies that have been done that I do think can be made much more efficient is post-trade infrastructure. There's a lot of fragmentation of post-trade infrastructure. There's also the lack of harmonization of basic listing rules and things like that could be more harmonized and brought together. But having markets across Europe is not the problem. It is, kind of different markets. It's really kind of all the policies and then obviously the post-trade infrastructure that could be harmonized.
Terry, come on in on the macro here. Going to you on oil because, we did hear yesterday that CME Group and its energy complex reached a new single-day volume record of 8.3 million contracts on March 6th. It surpassed the previous daily record of 7.9 million contracts. That was just set on March 3rd. Can you talk a little bit about what's happening at CME when it comes to energy just in the last few days?
I will, and I think when you look at my colleagues down in Atlanta, I think they traded over 11 million contracts in their energy complex, so they also had a very busy sessions over the last several days too. So the oil markets in general have been very active. You asked a question a moment ago about geopolitical risk, and oil has a lot to do with that, and I don't think too many people are talking about this, and it concerns me a lot. When you look at what we did by going into Iran, which I support what we did because of the way the rulership was going there, and I think that was detrimental for the people. After 47 years, something needed to be done. So I commend President Trump for going in there and doing it. The problem is, what does that mean as far as the derivative, since we're in this conference, for Russia finishing off in the Ukraine? What does that mean for President Xi going into Taiwan? I don't think anybody knows the answer to those questions. We just went into Iran, where they can now maybe potentially in their minds justify going into other countries just like we went into Iran. And we could say, no, we went after, you know, a really bad guy. What are you guys doing? And they could say, well, we think they're really bad guys, so why are you yelling at us? So I think that's an issue. So if you think oil can go from 118 to 87, which was your question, like it did, I can see it going back to 150. If in fact some of those other things happen. So I don't think the geopolitical risks to marketplaces between oil, interest rates, every other asset class is out of the woods by any stretch of the imagination.
You can make predictions on
that
Kalshi
was
about
Terry Duffy, the CEO and chairman of the CME Group. He is in discussion with Tim Stenovec of Bloomberg Business Week at the FIA Global Cleared Market Conference. The panel also includes Deutsche Boerse Group Executive Member Thomas Book, Nasdaq's Chair and CEO Adena Friedman, SGX Group CEO Boon Chye and Kalshi's CEO Tarek Mansour. Let's go back to the conference taking place in Boca Raton, Florida.
Considering intervening in oil futures markets. The idea is the government would use its huge balance sheet to trade futures contracts to push down the price of oil. He's already laughing, and I haven't even finished the question.
Oh, it's to me?
Yeah, it's to you.
Are you going to ask Tarek again? The prediction markets are saying about this.
The U.S. Treasury has traditionally stayed away from commodities markets. Is this a good idea? And look, it's still considering this, but I saw this.
So what's important about this, Tim, is that the U.S. Treasury Department, in the rumor that you're suggesting, and it's a rumor, I have not heard it substantiated by the administration, there's two ways they could go about this. Would they be buying calls on oil because they're concerned that this is not a short-term deal and the price could go up exponentially, and they want to make sure that the American people are protected? So nobody says that part of the equation. Or are they going to buy just futures and be long the oil market so they can do that? Or are they going to just kind of come in and try to sell the hell out of it to push the price down, which might be, you know, a biblical disaster to do so. So I don't see the U.S. government coming in using the futures markets in order to move the price in order to benefit the people. Because when you look at today, look at the biggest market in the world. Biggest market in the world is not oil. It's called the U.S. Treasury market. And the Fed's balance sheet today between $7 and $9 trillion. You know how much of that they hedge or use it to move the price? Zero. They don't use any marketplace for hedging or that. So I don't know why we would do it with oil. I think that was a suggestion by many of people about what you could do with the price of oil. But markets do not like when governments intervene in order for pricing. What he can certainly do is use the U.S. stockpiles, take them down, then replenish them at a later date. But to say that he's going to use a market in order to facilitate the price one way or another, I think is wrong.
Okay, Tarek, speaking of the macro, you said last year that Kalshi is expanding to 140 different countries. Yesterday, you announced you're expanding to Brazil, outside the U.S. for the first time. You're partnering with Brazil's XP to list event contracts. Where else will you launch this year?
So I'm offended you didn't ask me about my views on macro.
This is kind of a macro question, though, because it gets into account what people are thinking.
I'm kidding. I wouldn't have any insight, actually. If you really want real insights, you should go to Kalshi.com, www.kalshi.com. Then you get real insight with people with skin in the game. But we are going to take a pretty aggressive international expansion strategy. Our approach is very consistent with the U.S., so regulatory first. And it's also consistent with some of our kind of core beliefs. We like traditional financial market structure. We like intermediation. We like this idea that there's sort of an exchange, there's a market maker, and there's a broker. And they have different functions, all of which are key. Obviously the U.S., that's sort of a question around market structure that's been going on, and, we'll participate either way. But when it comes to international expansion, we like the partnership strategy, where we partner with local brokers. They have distribution, they have a brand, they have credibility with the regulator, and obviously the regulatory infrastructure. We're very excited about the partnership we announced with XP in Brazil. The early signs are very strong. We're looking at basically all the other jurisdictions. So Canada, obviously Europe, the UAE and Middle East, and then Asia, including Southeast Asia.
Okay. Boon, Chye, one to you about the market in Singapore right now. As I mentioned, you are working with Nasdaq on a dual listing mechanism. It's set to go live mid this year. Since announcing it, what have you heard in terms of interest from companies? Who's your target for these companies? Does this prevent the next C or the next grab from not listing in Singapore?
Well, first, partnership between SGX and Nasdaq is very strong. Our interests are aligned to work with companies to raise capital, providing investors with more choices. Yes, we're looking to make this operational by the middle of the year. Our teams are working together. The pipeline is building, and we think a few companies will use this global listing board to raise capital in the US via Nasdaq and in Asia via Singapore. And part of that is this will facilitate companies, whether in Singapore or Asia, and global companies or Asia Nexus, to tap the global pool capital. So some of the companies that you mentioned we missed, I think we're seeing these companies, new companies, and there are many more of these in Southeast Asia that I think will use this platform.
Well, how is the IPO pipeline in Southeast Asia right now? Well, I know you had a really good few months, but what's it looking like? What's the outlook?
We have over 45 in the pipeline as of now, and that's grown from 36 months ago. So it's looking strong.
Yeah, I mean, so Nasdaq and Singapore have been partners for decades, actually, on technology and other market innovations. We've been working together to create more connectivity across the post-trade infrastructure and other things. And I think this new dual listing program, there's a very healthy pipeline of companies looking to go public in general. But across Southeast Asia, because it doesn't necessarily even have to be a Southeast Asian company. It could be a U.S. company that has a lot of business in Southeast Asia where they want to tap into investors across Asia in addition to the United States. What is really unique about the partnership that we've developed with SGX is how much we've also had the regulator in Singapore, MAS, work directly with the regulator in the United States, SEC, to come up with a common listing framework that allows for the companies to be subject to one listing jurisdiction, not two. So that if they are eligible to list in the United States and they've gone through the SEC process, MAS will accept that as the regulatory oversight for that listing. They still obviously oversee all the trading and other things that are happening on the markets. But it's really an interesting construct of two regulators actually working together in a way that you don't normally see, to kind of create that combination, along with the exchanges, along with other key participants in Singapore, to really drive liquidity and drive investment. So it's a really unique and exciting partnership.
And we talked about geopolitics earlier on, single set of documents. I think gives the issuer a greater certainty on time to market. Right. And that's important in the world that we're faced today. Mm-hmm.
So Tarek mentioned trading on the weekends, so I think this is a good place to get to 24/7 trading and maybe tokenization as a way to do that. Digital assets too. We're going to try to fit quite a bit in the next few minutes. Thomas, you have a partnership with Kraken. You announced this back in December to create unified access across traditional and digital asset markets. What have you been able to offer as a result of that partnership? And just update us on how it's going so far.
First of all, we are really proud. It's a great team around Kraken. Our view really is that the tokenization does allow a completely new use case. Currently, the industry is really very message-based, right? And tokenization allows for a shared state approach to our industry, so it will allow a new market model. It does allow 24/7 fractionalization, instant settlement, and other things. So there will be use cases. Cryptocurrency is one. Tokenization of securities, of equities is one, but also, of course, payment and collateral coins. So we are looking with Kraken to really create a fully hybrid model so that you are both able to, for instance, have a stock that you can trade in the conventional, traditional finance approach, but also in a digital form with the same execution, with the same post-trade layer. So we are excited, and we are starting on that. I think if we sit here, I mean, the journey of the past 30 years of the industry has been from sort of floor pit trading to electronic trading. So you can all trade here, as Terry has said. Basically, everybody has seamless access. And I'm sure there will be a further transformation, a disruptive transformation with tokenization of assets. So we, as Deutsche Börse, we really want to lead that transformation in the use cases, and therefore with Kraken we are building various use cases, and we are really starting with cryptocurrencies. So we have crypto custody now in our CSD in Europe. We are the first one to offer preference in these cases.
Yeah, Adena, yesterday you said you're planning a new design for tokenized equity. Speaking of Kraken, you're working with Hayward, the parent company of Kraken. Is the whole point of this, at the end of the day, to get to 24/7 trading?
Well, we do talk about how do we get to, what we would call an always-on markets, but we're starting with 23/5 trading. So we're, even before we announced the partnership with Kraken yesterday and how we're looking at the Nasdaq equity token design, I think that we've been really focused on driving towards 23/5 trading in U.S. markets, and which really, frankly, is aligning ourselves a little bit more with the futures markets because they've been in a 24/5 market environment for a long time. So you've got the Nasdaq 100 future that trades all night, all the time, but you don't have the underlying stocks of the Nasdaq 100 that trade in the same hours. You don't have the option that trades in the same hours. So how do we try to create a more unified market environment where investors all over the world have the same experience? They have a consolidated tape. They have market protections. They have guardrails around their trading activity throughout the day, throughout their trading hours, in addition to the U.S. hours. This will not change the open and the closing times for the U.S. markets. This allows for us to have the same market infrastructure available all night. We are starting 23/5 because we also are working with DTCC, and there's some need to have some downtime every day. And we're not going into the weekends. We have not yet seen significant demand in that environment. So that's where we're starting. When it comes to the tokenization of equities, I think that is the next leg of innovation for securities markets. So we are first and foremost working with DTCC to tokenize equities at the QSIP, to actually represent equities in a tokenized form, to allow those to trade and settle on our markets through DTCC known infrastructure in a tokenized form. But we also are working with Kraken because there's the permissioned world and then there's the permissionless world, as you said, and to create the right bridge between the permissioned world, which is the world we operate in, to the permissionless world that does have instant settlement, that does have different market structures, that does extend it, but give the issuers, number one, the choice. Do they want their securities to be tokenized? Secondly, control in terms of understanding who their investors are, modernizing their experience in connecting with those investors, hopefully modernizing the proxy process, hopefully making some really big changes to their experience in both a permissioned and a permissionless world, we think is the future of markets. So we're very excited about that.
Terry,
you've been listening to Adena Friedman. She is the chair and CEO of Nasdaq, and she's part of a panel discussion taking place at the FIA Global Cleared Markets Conference. Bloomberg Businessweek's Tim Stenovec is moderating the discussion, along with Deutsche Boerse Group Executive Member Thomas Book speaking, CME Group Chairman and CEO Terry Duffy, the SGX Group CEO Boon Chye, and Kalshi's CEO Tarek Mansour. Let's go back to the conference right now.
What you're doing when it comes to reliability and how to keep them.
And again, we don't hide behind anything. I'm a very transparent person. When the deal happened over Thanksgiving, that was a data center issue that we don't own. That was human error on their part, and so we know what happened there. On the other issue, it was some technology as it relates to velocity logic, which is there to protect the clients, and sometimes things happen in the most inopportune times. So that is basically what happens. And there's nobody sitting up here or anybody in this room that doesn't work with technology or has it broke at a time where you wish it wouldn't have. So things happen. So, I'm very upfront about it, but I think our track record, when you look at our technology platforms, have been very resilient. We spend a tremendous amount of money doing them. I'd like to talk a little bit for a second, if you don't mind, on tokenization as well.
Please.
Because not only do I will talk about the bad stuff, what happened when it's going down, but when you look at tokenization, I said on my earnings call that I'm going to be looking at my own stable coin as well. So what I think is important.
CME coin.
CME coin.
Yeah,
absolutely.
working with Google, right?
Right. Well, no, that's different. That's tokenized cash. So tokenized cash will be on a single Google ledger. A CME coin would be on a distributed ledger that you could use within our own ecosystem. And I am working with the OCC, the Office of Controller, not the clearinghouse, the OCC, to potentially move forward with our own coin. And I think it's really important, especially when you look at the Clarity Act going on right now in Washington, about how much of these coins do you want to take or not take, because the same argument the banks have about why they don't want to be able to pay a yield on a stable coin would be the same reason a risk manager like myself would want to have, is I don't want to be sitting there with a bunch of coins and no cash. So you have to have a plethora of capital that you can offer to your clients. And we think a stable coin on a small amount makes sense. We think tokenized cash makes a tremendous amount of sense. We think cash makes a lot of sense, and other forms of securities that we take for our margin to risk, manage our products. I think just going down the path of stablecoins is probably not the best thing, but on tokenization, I know people are talking a lot about that with products. There is a legal framework here in the United States that none of these meet today, or they don't meet at Reg NMS. They don't meet a whole host of other things as it relates to. So even if you look at the way Robinhood and others are trying, and Kraken, who are trying to digitize stock trading, they have to do it within their own ecosystem of Robinhood, where you wouldn't be able to have access to it unless you had a Robinhood account. So what is it really gaining you? So I think this whole tokenization thing is interesting, but it doesn't fit within the legal framework of the United States of America.
Yeah, so I think that's where interoperability is really, really important, that we build interoperability across chains, but also across markets. You create a token standard that allows for these things to actually manifest themselves as equity as opposed to a securities-based swap, which is what Terry's referring to, and conveys the rights that an issuer should have. I mean, the one thing that we feel like for the entire process of tokenization is the issuers need to be a part of it. So we are building that token standard around that. But I agree with Terry that this is an opportunity for us to mature markets and to drive collateral efficiency. We've also announced a partnership with Baton Systems through Calypso to drive collateral mobility in a tokenized form using DLTs so that we can really start to leverage the advantages that blockchain technology can offer.
So Boon Chye, if this world that we get to ultimately is an always-on world, does it help Singapore, or does it make the time zone advantage that Singapore has and Singapore's markets have increasingly irrelevant?
I think it would be more relevant, would be useful. I think Terry talked about the CME coin. I think for clearing infrastructure, to give customer choices and efficiency, stable coins, tokenized cash, I think could be a direction of travel in future. And today, many exchanges, including SGX, we take multi-currency, we take cash, we take securities, and that could be just another way to enhance the ecosystem.
Tarek, I want to give, sorry, Thomas.
No, Tim, I just don't, I don't think that all markets will eventually be always on. Right? I think there's very different demands that you have across different constituents. I don't think that many institutionals really need to trade 24/7 on the weekend. That might be for use cases on the retail side. And you have markets, if I look at us, power markets are 24/7 all along, right? Or foreign exchange markets, and we also can do 24/7 clearing now with nodal clearing. So I think it will really be driven by where's the need. I mean, there Europe, probably a little bit like Singapore, is in a good position because we are between the time zones of the US and of America. But currently the drive and the discussion really stems from retail access, from digital apps, and it really comes around equities, right? And then sort of Asian flow getting into US stocks.
Can I just say something about 24/7?
Yeah.
What's really important is, you need to pre-fund no matter what you're doing, whether you're trading cryptocurrency or not. Because unless the banks are going to be open 7 days a week and the wires are going to have the same amount of flows that they have today, real-time payments is not going to facilitate enough outside of maybe a crypto asset class, but not the rest of them. So it's going to be really important that...
And I share that. You got to make a distinction between continuous trading, continuous liquidity, continuous settlement.
Okay, so I want to give Tarek the last word on this, and then I want to get to some questions. We're running out of time, unfortunately. We could do this I barely got through any questions. But Tarek, you've done always on. You've been always on. What are you seeing on weekends? What could you share with the people up here, the audience, about what you've noticed in terms of patterns and what people are interested in?
I'll try to be fast. My mental model for this is prediction markets are basically a financial product, but they're also in some ways a news product. And so in some ways, the news is always on, right? Like this notion that like something could go crazy on Sunday and the news will be like, let's wait till Monday, 8 a.m. to cover it, you know, doesn't make much sense. And I think that applies to prediction markets as well. Like you have to have these things be covering all the holes that, you know, currently exist. And, you know, we saw this weekend, you know, a lot of you were freaking out about the price of oil on Sunday, and, you know, some of you may have looked at Kalshi, because it was a gauge. And I think, the interesting thing here is, like, I think there's like two dimensions. There's a dimension of time, filling up basically, you know, all the hours of the day so that we have as much price discovery information about the hours of the day. And then the other dimension for us is just being able to put markets up fast enough on the things that are going on. And there's a paper from Kevin Hassett, who's the chair of the NEC right now, dating a few years back about prediction markets, and where he kind of argued this idea that as the world gets increasingly more complicated, more dimensional, to be able to have accurate asset prices for our traditional assets, you know, whether it's indices or home prices and so on, we need infinite markets. You need to price all the different dimensions that feed into those asset prices, whether it's geopolitical risk, COVID, AI and how it's going to accelerate. Citrini report came out, for example, this week. It actually tanked some stocks. You know, we put out a market on this, and it shows that there's only less than 10% chance of this doomsday scenario happening. So that's kind of how we think about it, is like, how can we cover all the different dimensions that matter to the economy so that people can get an accurate gauge on what's going to happen.
Okay, I want to go to questions in the last few minutes that we have. I know there's some mic runners in the audience right now, so if you have a question, please head there. I would ask another question, but I want to make sure we have time for some audience questions. Yeah, please.
Thank you. I just thought the conversation at the beginning of the panel was interesting about the word speculation, betting, gambling, hedging, etc. At the end of the day, futures markets began with hedging, right? So agricultural hedging, one person's hedge is in a person's speculative position. So people have always speculated, whether you call it betting or speculating or whatever. No, hedgers don't hedge with hedgers, right? So there has to be someone else. It's about transfer of risk. So I found the argument at the beginning a little sort of strange. And with regard to betting, we'll call it that for a second, in Europe and in Southeast Asia, there's been betting for decades. There are loads of platforms where you can bet. I could bet now on my telephone on betting. To say, you know, Kalshi's way ahead of Europe and everything else, it's just not true. You can bet on anything. I find it a little distasteful when we start betting on assassinations and nuclear attacks.
We don't have that on Kalshi.
That's a very different thing.
Well, why don't you jump in? Because this has been an issue. And distinguish between poly markets.
To be clear, there's a few things. Like, one, I didn't say that, you know, we reinvented betting. Actually, I'm claiming the very opposite. We also had betting in the U.S. in the form of DraftKings and FanDuel and some other platforms. You know, I do believe that, you know, U.S. has done quite a good job at innovation in the last decade, and the results and numbers show. We don't do war, terrorism, assassination, death on Kalshi, because those markets are illegal. They're also distasteful. I actually do agree with you. And there is, you know, we do face this issue as a company. There are, you know, there is two main players in the ecosystem. One that has been committed to regulatory first approach to this model. We spent 4 years getting regulated by the CFTC and have engaged with our regulator, the federal regulator, at every step of the way to bring these markets to light. And it took us a while, right? A lot of you have actually heard of poly market before Kalshi. Now you're hearing about Kalshi, maybe a little bit more than poly market, but and we do, you know, poly has sort of taken a different approach, which is the offshore, unregulated approach. And they are coming to the U.S., and I'm very excited about their entry to the U.S. I think they will do a good job. They have a great team. But there's an important bifurcation here, which is the markets that you're reading in the headlines, or the insider trading and the Maduro trade, those are happening offshore on unregulated products, not on products under the CFTC's jurisdiction, because they wouldn't be allowed.
Any other questions here? Or am I going to do a lightning round with the folks? There's a question right back there.
Hi. Sorry, just following up on that question. So specifically prediction market on sports, what is the tension between sports bookmakers versus prediction market? I know I've been speaking myself with a few bookmakers, and they say that prediction market of sport is temporarily with the current administration, as Terry says. What is your take? How do you see the split between prediction market and sports books competing on the same marketplace?
I think you should limit the number of questions on the prediction market so others can speak. But, look, I think, you know, the sports books are saying that, but they're entering prediction markets, so maybe that's my answer.
Is there anyone else who wants to weigh in on that? Terry?
Oh, what did you say?
The sports books are saying these are not going to last, but then they seemingly are entering prediction markets and are re-strategizing.
And Tarek,
well, I don't know if I agree.
The strategy around prediction markets.
You said that, I don't know if traditional sports books don't think that, they think this is not going to last?
I thought that was the question, right?
If that's what they're suggesting, I would suggest that you look at what the opinion is of the people who invest in the publicly traded online gaming companies think a little bit different at this moment in time. And I'm not trying, I'm a partner of FanDuel with Flutter, and I like this company a lot, but they have suffered dramatically, as has DraftKings, or the two US-based entities that are publicly traded. They've lost a tremendous amount of their value. So I don't think investors are suggesting this is a one-and-done type of operation. I think what's really important is, as we said earlier, the guardrails need to be determined. I think this is going to the Supreme Court ultimately to decide if, in fact, these are sporting contracts that should be under state law or these are swaps under federal. I think that's where it's going. I think both prediction markets and online gaming can operate in the same environment going forward. They might have a different constituency of clients, they may not. They might have a crossover. But they are not, I don't believe Kalshi is going away, and I don't believe the online is going away either, but they have definitely suffered at the success of Kalshi. There's no doubt about that.
We only have a couple minutes left, so I want to do a lightning round, and I'm going to start with you, Thomas. I'm asking each of you the same question here. This is about innovation and exchanges. That's the theme here. What is the biggest area of innovation for you?
It's clearly tokenization. That's where the focus is in terms of technology that we'll have for the next 10, 20 years, and we will focus on that transformation. I'm sure it will open up completely new layers of efficiency, both in collateral mobility, but also in the way that intermediation layers can be removed. So that is a clear focus, and we are, of course, very technology-driven as a company.
Thomas says tokenization. Boon, Chye, what about you? Biggest area of innovation?
It can happen in isolation. It's about market need, market gap. We launched 3 months ago crypto perpetual futures. That's the fit into the market need. And looking at the geopolitics that we're in, I think rates is clearly one of the macro view that investors are looking for Asia. I share the point on tokenization, but I think it's also a matter of adoption. What's the point of inflection?
Adena, how are you thinking about innovation? Biggest area for you?
We're as equally focused on tokenization as we are on AI. And I think AI is an incredible technology that's coming across every industry, but certainly is going to have a huge role to play in the capital markets. There's so many things we could go into there. I'm going to that would be another panel. But we have an AI-driven order type. We have more order types that are driven by AI. We have market protections that we are leveraging AI to the utmost of its ability to protect the markets. Obviously, there's a lot of automation that can be done in terms of the inefficiencies of workflow across the system. But there's also the opportunity to really leverage AI in new ways to drive trading and investment strategies. And so there's a whole new way of thinking about AI across markets that I think is a really important part of the future of markets in addition to tokenization.
Terry?
A couple of things I would say. One is distribution. The other, I would say, education. And the third thing, which I think is the most important thing going forward, and that's capital efficiencies. We've been able to create capital efficiencies going from 20 billion a day to 80 billion a day today. And when you can continue to see that going probably to 100 billion a day in the near term, that's what continues to help markets grow. Because when you can take people, give them back their money to deploy to do other things in what they want to do, but yet still do their risk management without putting any risk to the system, that's what I think innovation is all about.
Tarek, last word to you.
So I think that we are seeing a shift in consumer behavior that is very rare in consumer when it comes to prediction markets. And I think maybe in the last 2 decades, I think we saw it in social media, I think rideshare and home share, then AI. And I think prediction markets is following that similar trajectory where it is touching the masses. It's really mainstream consumer adoption, and I think over the next few years, we're going to see hundreds of millions of people engaging with these products, whether they're trading actively or they're using it as an alternative news feed. I think that this bodes very well, and it's very exciting for the industry because, going back to Tarek's point, I think it's going to help with distribution, it's going to help with education when it comes to prediction market, but also traditional derivatives, and that's something I'm very, very excited about.